Welcome to our year-end 2009 1492 web video series. Thanks for joining us today. My name is Joe Ferrona. I'm lead portfolio manager of our growth strategy here at 1492. I have with me today Rob Dameron, who is also a co-manager on the small cap growth strategy, and Rodney Hathaway, who is our lead portfolio manager on our value strategy. As we are wrapping up 2009 here, just a few short days before the end of the year, we wanted to talk to you about some of the themes that have more recently played out in the portfolio, and one theme that is likely to play out in the portfolios in 2010. Well, what a year 2009 has been. We're wrapping up our first full year as a firm, and I can't be happier with the performance of our portfolios. Both strategies have outperformed their respective benchmarks by a wide margin on a year-to-date basis, and we're just a few short days away from wrapping up our first full year here at 1492. If you've tuned into some of these video series, the prior video series that we've done, we've talked a lot about thematic investing, and that's the core strategy that we deploy here at 1492. And the topic of today's conversation is those strategy or those themes that we've played out in both strategies that have really played out nicely for us more recently. And again, we're going to talk about one that's going to play out in 2010. With that, I'm going to turn it over to Rob Dameron, who's going to talk about one of our themes in the growth strategy that has played out significantly here in 2009, the infrastructure theme.
All right, thanks, Joe. As we have mentioned in the past, one of the best ways we discover new themes is through meeting with company managements on a regular basis through our offices as well as at conferences. And earlier this year, when most company managements were experiencing significant declines in revenue and earnings, we did find one group of companies that's serving the global infrastructure market that were enjoying accelerating revenue and earnings. And that was partly driven by the global stimulus packages that were being deployed around the globe this year. One of the best performing companies in our portfolio this year is a company in the sweet spot of this global infrastructure theme. It is a leading global technology and services company focusing on energy, transportation, agriculture, environmental, and homeland security sectors. The backlog for this company as of September 30th of this year was up 39% over the year-ago period. And a few contract wins driving this backlog include a homeland security contract to monitor and help secure our nation's vital water, gas, and electric networks. Also a smart metering contract in Europe and in China to monitor in real-time electricity usage. And there are several more contracts that have been driving this backlog. Another company in our portfolio for most of the year that has benefited from infrastructure spending is a marine contractor that's located in the southeast of the U.S. It provides turnkey heavy civil marine construction solutions including dredging, shoreline protection, levee maintenance, and hurricane restoration. Backlog for this company was up 40% on a year-over-year basis as of September 30th of this year. And a few contract wins that were driving this backlog include a terminal expansion for 2 new ship docks in southeast Texas, an Army Corps of Engineer award to dredge part of the Intercoastal Waterway, and construction of a bridge in South Carolina. So we have a number of other names in our portfolio that are currently benefiting and have been benefiting from this global infrastructure theme, but hopefully that gives you a little taste of what we're thinking about in this space. So with that, I will turn the call over to Rodney to talk a little bit about the regional bank theme.
Great, thanks, Rob. According to Wikipedia, a contrarian is a person with a preference for taking a position opposed to that of the majority view prevalent in the group of which they are part. Our team here at 1492 prides itself in generating independent investment themes that are often contrarian by nature. One theme that we've discussed with you in the past is centered on the financial services sector, specifically regional banks and broker-dealers. Recall that we started out 2009 with very little exposure in both strategies to the financial services stocks, but began to add names to the portfolio during the second quarter, at which time most Wall Street analysts were still proliferating reasons as to why to avoid these names. The fear amongst investors was and still is the extent of future asset write-downs, bank liquidity, and the timing of when the economy is going to turn. This really gave our team an opportunity to meet with and interview scores of management teams and screen out a select group of companies that displayed the fundamentals and valuation we deemed to be attractive. Namely, we sought out regional companies that were growing their deposit base organically, taking market share in terms of attracting seasoned loan officers and financial advisors that are able to port over their books of business, improving trends in net charge-offs, non-performing loans, minimal commercial real estate exposure, expanding net interest margins, and an attractive tangible common equity ratio. Through this screening process, we've identified about a dozen stocks for both the growth and value strategies that display these characteristics. This investment theme has already added to portfolio returns in that several of the top performing stocks in both the growth and value strategies over the last 6 months are financial stocks. With that, I'm going to turn it back over to Joe to talk about our aerospace theme.
Thanks, Rodney. One of the more recently deployed themes in our portfolios is the aerospace theme, and these are companies that not only produce aircraft parts, but they provide spares and titanium metal for the construction of the actual aircraft. After a very difficult 2008 and 2009 due to the recession and also difficulties with Boeing getting their 787 Dreamliner literally off the ground, these stocks were bruised and battered, and after significant due diligence and talking with the companies that make up this particular theme, we sensed that our companies were seeing a turn in their business, and with a significant catalyst being the Boeing 787 actually getting off the ground in late December. And as we sit here on December 23rd, that first flight of the 787 has actually taken place, which has given life to many of these stocks. And we see a significant amount of new business being created as a result of that 787 production ramp that will happen in 2010. These stocks have begun to really nicely outperform. One of the stocks that we highlighted in our third quarter newsletter was BE Aerospace, ticker BEAV, which is a provider of cabin interiors and seats for the airline manufacturing business. And that stock now, since our recommendation, is up over 33% in just a few short months. So that's a very strong theme that we've played out through probably a half a dozen stocks within our portfolios. With that, I'm going to turn it back over to Rodney to talk about a theme that will likely play out in 2010.
Great, thanks, Joe. This theme that Joe refers to centers on the movie industry. Throughout this current recession, we've been searching for companies and businesses that have been able to weather the drop in consumer and corporate spending during this recession. During the course of meeting with the management team in particular, at the beginning of the fourth quarter, that owns and operates a chain of regional movie theaters, we learned that traffic and pricing has been fairly robust throughout this year. As it turns out, taking the family to a movie is still a relatively good value, and we refer to it as a nice 2-hour vacation. In addition, new projection technology that incorporates large screen formats and 3D are enhancing the viewer experience that is not available at home. This drives the value proposition to the consumer and will continue to drive better traffic and pricing for the next several years, we believe. The recent release of Avatar is a great example of this, providing a significant boost to box office revenues. Expanding upon the initial management meetings we had a couple months ago, we've been able to add multiple stocks in both our strategies that we believe will benefit from this investment theme. With that, I'm going to turn it back over to Joe.
Thanks. In closing, thanks to all of you for your support throughout 2009. We look forward to a very successful 2010. We hope you've enjoyed these web videos, the web video series that we've done for you throughout 2009, and we'll be bringing more of those to you in 2010. The next time you hear from us will be on January 20th at 1:30 p.m. Central Time, at which time we will do our quarterly attribution call. On this call, we'll highlight the attribution for the fourth quarter of 2009 as well as the full year 2009 and highlight where we outperformed by both sector and specific stocks. And lastly, we wish all of you a very happy, healthy holiday season and a very prosperous and bullish 2010. Thanks for watching.